Hey everyone, it is Julie here with TipRanks. In today's video, we're taking a look at 3 dividend-paying stocks that are great to consider for the month of September. So let's get into it. Alright guys, welcome back and thank you so much for being here. Like I said, today we are discussing dividend stocks, specifically 3 stocks that not only have some double-digit upside potential and a solid history of making these dividend payments, but they also have ex-dividend dates coming up here in September. So you'll be collecting those sweet dividend payments as soon as October. Just before we jump into all of that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. And keep in mind these videos are never a suggestion to buy or sell any specific stock and are just meant for entertainment and information purposes, so always make sure you're doing your own research and due diligence. Okay, with that being said, let's get right into these 3 dividend-paying companies. The first on our list today is a medical technology company called Medtronic. Their stock trades under the ticker MDT and is currently priced just shy of $135 per share. Medtronic pays a quarterly dividend of 63 cents per share for a current yield of 1.8%. Their next ex-dividend date is coming up on September 22nd for a dividend payment date of October 14th. The Medtronic stock is actually a dividend aristocrat, and they have a 44-year history of increasing their dividend. They've seen a 16% dividend per share compound annual growth rate over that 44-year history. Medtronic is among the largest medical device companies in the world. They have operations in 150 countries with 90,000 different employees. Their therapies have helped 72 million people per year and support their mission to alleviate pain, restore health, and extend life. Their products treat 70 different health conditions, including cardiac devices, cranial and spine robotics, insulin pumps, surgical tools, patient monitoring systems, and more. Just last week, on August 25th, Medtronic shared an upbeat Q1 earnings report. Their revenue was recorded at $7.99 billion, surpassing the consensus estimates of $7.85 billion. Their procedure volumes for most of their businesses are at or above pre-pandemic levels. Their earnings per share came in at $1.41, which was growth of 127% year over year. Following that promising quarterly report, we had several analysts weighing in with updated price targets. We heard from Cecilia Furlong from Morgan Stanley, who noted the solid start to their fiscal year, saying that while acute COVID pressure is in the near-term focus, she remained positive on the setup behind key upcoming pipeline additions and continued portfolio performance. We also heard from David Tong at Argus Research, who also noted the solid Q1 and added that he is positive on Medtronic's solid market position in its minimally invasive therapies, brain therapies, and pain therapies units. Altogether, we have 17 analysts with current ratings on the Medtronic stock. It comes in as a strong buy based on 16 buys, 1 hold, and no sells. The average price target of $148 would be a 10% upside potential for this next year. On the low end, we do have that hold rating, which would be a 2% upside potential, and on the high end, we have this $165 price target, which would be a 22% upside. The second dividend-paying stock on our list doesn't need much of an introduction, as it is arguably one of the most recognizable brands in the world. That is none other than Coca-Cola. Trading under the ticker KO, their stock is priced at $56.50 per share. Coca-Cola also pays a quarterly dividend at 42 cents per share for a dividend yield of 2.96%. Their ex-dividend date is coming up here on September 13th for a payment date of September 30th. Coca-Cola is proud to be a dividend king, meaning they've increased and paid dividends for at least 50 consecutive years. In fact, as of February 2019, they were at 57 years of consecutive annual dividend increases. Since 2018, they've returned $7.1 billion to share owners. As I said before, I think many of us are quite familiar with Coca-Cola and their wide portfolio of brands. Did you know that their brands capture approximately $1 out of every $4 spent worldwide on non-alcoholic beverages? That's pretty huge. Coca-Cola has 4,300 products worldwide and are ranked number 1 worldwide in value. Their products include Coca-Cola, of course, but also big names like Powerade, Minute Maid, Dasani, and Smartwater. Back at the end of July, Coca-Cola shared solid results for their Q2. Their net revenues grew 42% year-over-year to $10.1 billion, surpassing the street's estimates of $9.25 billion. That growth was driven by the recovery in COVID pandemic-impacted markets. Their adjusted earnings per share increased 61% year-over-year to 68 cents, also coming in ahead of analyst expectations of 55 cents per share. For the full year of 2021, Coca-Cola expects to report revenue growth of 12 to 14% and adjusted earnings per share growth of 13 to 15%. Weighing in on the Coca-Cola stock following this earnings report was analyst Bill Chappell from Truist Financial. He says that the company remains part of the reopening trade, especially as the COVID Delta variant and inflation fears create additional volatility in the market. Coca-Cola's share gains in the quarter should also help further its leading position in the NARTD, or non-alcoholic ready-to-drink category, while its continued focus on long-term profitability is expected to be rewarded. The Coca-Cola stock has 16 current analyst ratings and currently comes in as a moderate buy based on 10 buy ratings and 6 holds. The average price target of $62.19 would be a growth potential of about 10%. Several of the hold ratings come in at the $60 price target, which would still be about a 6% upside potential. On the high end, we have a couple price targets at $65, which would be growth of 15%. And last, but certainly not least on our list today, is food service distribution company Sysco. Trading under the ticker SYY, they're currently priced just over $78 per share. Their quarterly dividend is 47 cents per share for a yield of 2.31%. Their ex-dividend date is coming up on September 29th for a dividend payment date of October 21st. Sysco is another company that has a very long history of making their dividend payments and also growing that dividend. They currently boast a 51-year record of dividend increases. Sysco's U.S. food service segment is the foundation of their business, with $40 billion in annual revenue and strong profit margins. They've won $1.8 billion of net new business with national brands, including big names like Panda Express, Panera, Wendy's, and Burger King. Sysco shared their latest earnings report back on August 9th. Their sales were stronger than expected, increasing 82% year-over-year to $16.1 billion and beating consensus estimates of $14.2 billion. Their fiscal 21 revenue was down 3% year-over-year to $51.3 billion. Sysco posted earnings of 71 cents per share compared to a loss of 29 cents per share delivered in the same quarter last year. This was also ahead of what analysts were expecting, with earnings of 60 cents per share. They also have a new $5 billion share repurchase plan authorized. Over the past 5 years, they've had $6.6 billion in share repurchases. On top of that, they deleveraged their balance sheet by $3.4 billion in 2021 and are targeting a further $450 million for the fiscal year 2022. The Sysco stock does just have 3 current analyst ratings, coming in as a moderate buy based on 2 buy ratings and 1 hold. The average price target of $90.33 would be just shy of a 15% upside potential. On the low end, we have our hold rating at $84, which would still be a 6% upside, and on the high end from Jefferies, a $94 price target, which would be growth potential of nearly 19%. So there are 3 dividend-paying stocks, all with some great upside potential and solid histories of paying dividends, plus some dividend payment dates coming up in the near future. Now, I always love hearing from you guys, so let me know your thoughts on these 3 companies. Are they ones that are maybe in your portfolio already, or are they new to you? Let me know your thoughts down below. As I mentioned before, these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes, so please make sure you're always doing your own research and due diligence before making any investment decision. If you made it to the end of today's video, please hit that thumbs up button and make sure you subscribe to the channel as well. I hope you all have a wonderful day, and I will see you back here next time.